Hello and a very warm welcome to you. I'm Natalie MacDonald and you're watching Sydney Direct. A fall in the Australian dollar was said to be just the ticket the Australian economy needed to boost growth and to get consumer and business spending going. However, last week's AI Group's manufacturing, construction and services indexes showed that this may not be the case just yet. To find out more, I met with AI Group's Director of Public Policy, Peter Byrne. Peter, Happy New Year to you. Thank you very much for taking the time to chat with us today.
Thanks, Natalie.
Okay, so we've seen contraction across all three indices that AI Group provides information for. So if we take into account results from the manufacturing, from the construction, from the services indexes, really, how does this shape your overall outlook for Australia's economy at present?
Well, all three indices are below 50, so that indicates that all of those sectors are contracting, and the outlook is not that great for the near term. So the next couple of months don't look that great either. New orders are down, all below 50, and in manufacturing, new orders really fell very sharply in December. So that's fairly discouraging. You've got to be wary about putting too much emphasis on a single month's results. But in all cases, the 3-month moving average is also below 50, so that doesn't point to a very positive start to 2015.
Let's consider the construction sector then for a moment. And respondents to the index did turn around and say that there had been sort of a reduction in new orders, and that's a result of sort of a subdued consumer outlook at present. We also had official housing loan stats come out of Australia this week, and again, that data showed a decline in housing finance. Is the housing bubble over for Australia?
Well, the bubble usually refers to the prices, and prices were pretty strong over the last, say, half year, exceptionally strong. And that was mainly due, I think, to low interest rates and a bit of foreign investment inflow into that sector, and that's pushing that up, and so that people started chasing capital gains there. That may well have ended, those price rises. We haven't really got data. Everything shuts down over Christmas, and so no one's selling houses. But nevertheless, prices remain elevated. I don't think there's any evidence to say that that pricing bubble has burst, but certainly over the last quarter of 2014, activity in residential construction did slow down, but from pretty healthy levels. And the other thing is that the fundamentals facing the construction sector is that a fundamental factor is that the big investments in mining projects and ports and roads connected to mining are coming to an end. And that really underwrote a high period of activity in construction for quite some time. And that is now inexorably coming down. And now for periods in the next year or so, a couple of years, housing and commercial construction, apartments also, may well offset that decline. But fundamentally, the construction sector would be expected to be in decline as that sort of activity becomes less important. It so happened that the last quarter of the last half of last year, certainly, housing was pretty strong, apartments was pretty strong, commercial construction picked up, but they were all easing off as the year ended, and we would expect that construction as a whole would be generally subdued for this year because of that, the absence of activity, relative absence of activity in the engineering construction, the heavy stuff.
Now, we've spoken previously about Australia's competitiveness, and we've also spoken previously about sort of the falling Aussie dollar. How do those dollar rates kind of support that competitiveness? Oh,
they're fundamental. So since September last year, the Australian dollar has fallen by something like 13 or 14% against the US dollar. That's pretty sizable. And against our trade-weighted index, it's more like, say, 9%. That's because it's risen against the euro and the yen, both big trading partners, but against, say, Korea and China and the US, the dollar has fallen quite sharply. So that's fundamentally, that will impact positively on competitiveness. It comes on top of a decline the year before. So since April 2013, the Australian dollar's fallen by almost 25% against the US dollar, and something like 16 or 17% against the trade-weighted index. So that's a sizable depreciation. Now, so the factor is, the question is, when will that happen? When will that fundamental improvement in competitiveness flow through to actual activity and confidence? There's always a lag, of course, and imports are more expensive, so imported components, capital equipment, to the extent that that's imported, which is a high proportion, they become more expensive, and so that's a counter to economic activity because of the depreciation, but that's sort of temporary or short term at any rate. The other factor is, the level of the dollar is one thing, but business expectations about where it will be is probably more important. And I think that the fall over the last 4 months of 2014 will convince people that the dollar is down below, in the low 80s or below, for the next few years at least. So that will, as that sinks in further, and as that filters into business expectations, that will affect business plans, and people will invest more in order to take advantage of the more competitive domestic production and the more competitive exports that we can do. And that we're hoping that will happen over this year. But of course there's lags, and of course it all rests on business sentiment, because the dollar, the objective circumstances for competitiveness can be there, but unless people are confident and willing to invest, then those circumstances become secondary, because people's animal spirits aren't there and driving the economy.
And this sort of extends further than just businesses as well. The services index highlighted subdued consumer spending, also again coming into that lag that you mentioned. When is that caution sort of likely to wane again? Can we hope for 2015?
I think a big driver of consumer sentiment is job security. Unemployment is rising in Australia and jobs growth is slow. So until people are convinced that their jobs are more secure, they will be hesitant about opening up their wallets. You know, in a sense, the business activity has to come first. So investment, employment, people have confidence about jobs growth, about the probability that they'll keep their jobs for the next little while, then they'll start spending.
Peter, thank you so much for your time. We look forward to speaking more with you this year.
Thanks, Natalie. I look forward to it too.
That 25% drop in the Aussie dollar not quite shining through into the Australian economy yet, but hopefully we will see signs of a pickup through this year. That is all we've got time for right now. Thanks very much for joining us. I'll be back next time.